Welcome to today's deep dive. I want you to start by doing something for me.
Oh, jumping right in.
Yeah, right into it. So wherever you are right now, I want you to just imagine reaching into your pocket and pulling out a crisp $1 bill.
Okay.
Or, just picture it in your mind. Look really closely at the details, the heavy green ink, the portrait of George Washington, all those intricate official seals.
Right, the whole classic design.
Exactly. Now ask yourself a very simple question. What is this piece of paper actually worth?
I mean, I feel like the default instinct for almost anyone is to just shrug and say, well, it's worth $1.
Yeah, right?
We treat that as just this foundational law of physics, like it's an undeniable fact.
Okay, well, let's unpack this. Because today, we're going to challenge that instinct entirely. We are diving into a massive stack of notes and this incredible excerpt from the show Unfiltered Build.
Yeah, they recently did a really intense, deep breakdown of the financial philosophy of Joseph Sack.
Right, and if you aren't familiar with Sack, he's a highly polarizing financial thinker. Very much a contrarian investor.
Very much so, yeah.
And his entire philosophy relies on one very uncomfortable premise. He says the modern financial system isn't broken.
Right. He says it's working exactly as it was engineered to work.
Exactly. But, and here's the kicker, it isn't designed to help you build wealth. It's designed to keep you dependent.
Yeah, it's a heavy concept.
It really is. So our mission in this deep dive is to explore Sack's hidden reality of money and basically figure out how we can navigate it without getting, trapped.
And to even begin understanding Sack's version of true freedom, we really have to start at the absolute bedrock of this system.
You mean that dollar bill we were just picturing?
Exactly. Sack argues that what you're holding in your hand isn't actual value. He bluntly calls it monopoly money.
Monopoly money. I mean, that sounds like a cynical exaggeration.
Yeah. It does sound like hyperbole at first, but when you look at the mechanics of what he's saying, he's pointing out that the paper itself is really just a receipt for a promise.
Right, because for over 50 years now, there has been no vault of gold backing that dollar.
Yeah, you can't take it to a federal building and exchange it for a tiny flake of precious metal anymore.
Right. So what does back it?
Well, the historical context is crucial here. Once the gold standard was removed, what backed the dollar shifted entirely to confidence.
Like just trust.
Basically, yeah. It became a shared psychological construct. We all collectively agree to treat this piece of cotton and linen as if it has intrinsic value.
So the machinery of the economy just keeps turning based on that agreement.
Exactly. It's a system propped up exclusively by faith. But the mechanism that Sack wants us to look really closely at, the one hidden inside this faith-based system, is inflation.
And he is ruthless about this part. He argues that inflation isn't just some byproduct of a busy economy.
No, not at all.
It's not some accidental weather pattern that central banks are just, trying to manage with umbrellas. He says it is an engineered policy.
Right.
The people printing the money have decided, quite purposefully, that your dollar should be worth a little bit less every single year for the rest of your life.
Which is a wild thing to really internalize.
It is. So what does this all mean for you? It's kind of like running on a treadmill where someone else controls the speed. And they keep tilting the incline up while convincing you that you're just getting stronger.
That's a great way to put it.
But I do have to push back here for a second, just to play devil's advocate. Isn't a little inflation just normal, healthy economics?
Well, that's what we're told, right?
Yeah, we always hear that it keeps people spending, prevents stagnation, and just keeps the whole economy warm.
And look, on an economic whiteboard, central bankers will absolutely argue that. They'll say a 2% inflation target prevents the economy from freezing up.
Right, the standard textbook answer.
Exactly. But Sack's philosophy asks us to look past the whiteboard and ask who that policy actually serves. Because it engineers a massive, invisible power shift.
Okay, break that down for me.
Well, think about the mechanics of inflation. If money loses value over time, then saving money is essentially a slow leak.
Oh, wow. Yeah.
So the incredibly responsible person who works a 40-hour week, lives completely below their means, and stacks cash in a traditional savings account, they're quietly posh.
Because their money buys less and less every year.
Right. They bleed purchasing power every single year simply for being disciplined.
While on the flip side, the system heavily rewards the borrower.
Yeah.
Like it rewards the person holding hard assets or the huge corporation that owes a fortune and gets to pay it back decades later with, cheaper, weaker dollars.
Exactly. It creates this environment where the math itself actually nudges you into debt. Year after year, the message is clear: do not hold cash, borrow against it.
Which leads to what Sack calls the soft cage.
Yes. He describes this debt cycle as a leash or a soft cage, because once you owe, your optionality just evaporates.
You're stuck.
You're totally stuck. You can't just quit a toxic job. You can't easily take an entrepreneurial risk or relocate to a new city. You belong to your payments.
Man, that is a devastating way to look at a morning commute.
It really is.
Think about it. A person with a mortgage, 2 car notes, and a rolling credit card balance wakes up, and the first 8 hours of their day are already spoken for by a lender.
Yeah, that's the soft cage in action right there.
But if you take that individual treadmill and scale it up, how does this logic apply to the country, like the people actually running the printing press?
Well, the scale of this design at the national level is where Sack's argument becomes truly staggering.
I mean, the numbers are just insane.
They are. The United States national debt is currently sitting at over $39 trillion.
39 trillion.
And to put a microscope on how fast that's moving, it is climbing by roughly $7 billion every single day.
7 billion a day. I don't think the human brain can even process a number that large.
It's abstract to the point of absurdity. It really is. But the mechanism of how that debt is serviced is very real.
Okay, so what does that look like in practice?
Well, the country spends over $1 trillion a year just on the interest for that debt.
Wait, just the interest?
Just the interest. We aren't buying infrastructure with that $1 trillion. We aren't funding schools.
That is just wild.
To put that in perspective, $1 trillion is more than the entire U.S. defense budget.
Oh my gosh.
Yeah. One of the single biggest expenditures of the government is simply paying for the privilege of having borrowed money in the past.
And this endless cycle, borrowing just to cover the interest, owing more, paying more interest, it's constantly sold to the public on the evening news as progress.
Right. It's pitched as the complex engine of a healthy, modern superpower.
Meanwhile, the elites running the massive banks and funds seem completely unfazed by this unpayable mountain.
Yeah, they act like it's totally under control.
But let me challenge this narrative for a second. Are the people at the top really just skimming? Because they project this incredible aura of invincibility.
They do, yeah.
They demand we treat the financial sector like this sacred, highly complex temple of mathematics that only they understand.
And the contradiction you're sensing right there, that is exactly what Sack calls the facade of ego.
The facade of ego.
Yeah. You have a fundamentally unpayable macroeconomic debt existing right alongside the absolute supreme confidence of the banking sector.
So it's all act.
Well, the reality Sack points out is that the individuals running these massive financial institutions don't actually create anything of physical value.
Right. They don't build houses. They don't pour concrete or, grow food.
Exactly. They position themselves directly in the middle of the flow of other people's money, and they just skim a percentage as it passes by.
That's a confidence game.
In the truest, most literal sense of the phrase. Their power relies entirely on the public's unquestioning belief that these institutions are untouchable masters of the universe.
Because if the public suddenly stops believing they hold all the cards,
then the illusion shatters completely.
But I'm realizing that this skimming isn't just happening in Wall Street boardrooms with billions of dollars, right?
No, not at all.
Like, they don't even need me to take out a massive loan to extract value from me. This is happening right inside the average checking account.
Every single day. Sack calls this the everyday cruelty of the system.
Let's look at the mechanisms of that everyday cruelty. Overdraft fees are a perfect example.
Oh, absolutely.
Because functionally, an overdraft fee is just a tax on being broke.
That's exactly what it is. The bank possesses the technology to simply decline your debit card at the register if you don't have the funds.
Right. And that would cost them $0 and save you a penalty.
But instead, they consciously allow the charge to go through, plunge your account into the negative, and hit you with a $35 fee.
And the source material highlights something even more predatory. For years, banks would deliberately reorder your transactions to maximize that damage.
Yeah, this part is infuriating.
It really is. Think about this. Let's say you had $50 in your account. Throughout the day, you buy a $4 coffee, you get $20 in gas, and then a $60 auto pay hits for your internet bill.
Okay, so you're a little short.
Right. Chronologically, the coffee and gas should clear fine, and the internet bill triggers one overdraft fee. But the banks wouldn't process them chronologically.
No, they engineered the software to process the largest charge first.
Exactly. They'd clear the $60 internet bill first to immediately drain your account below zero.
Yep.
Then they would hit you with a $35 fee for that. But because you are now in the negative, they hit you with another $35 fee for the coffee and another $35 fee for the gas.
It's just brutal.
They actively rigged the mathematical order to extract over $100 in penalties from someone who was just short by a few bucks.
And you see that same extractive logic scaled up into predatory lending, too, like payday loans or title loans.
This is the worst.
The design goal of those financial products isn't to be paid back in a timely manner. If you pay it back quickly, they actually lose money.
Right. The principal balance is designed to barely move.
Exactly. They want the loan to live forever. They want you sitting in that chair, making minimum payments indefinitely.
Which brings up the craziest part of how banks operate with the money we actually do have.
Oh, the fractional reserves.
Yes. They don't just put your paycheck in a little safe with your name on it. They operate on fractional reserves.
Which means they keep a tiny sliver of your cash on hand and they lend the rest of it out.
Exactly. They earn absolute fortunes off your deposits by funding mortgages and business loans while paying you, what, a fraction of a percent in interest.
If you're lucky.
It's like valet parking your car, and while you're eating dinner, the valet rents it out as an Uber, makes a bunch of money, brings it back with an empty tank, and then charges you a monthly maintenance fee because you didn't leave it with them long enough.
I love that analogy, but it's actually even worse than that.
How could it be worse?
Well, the valet isn't just renting your car to one Uber driver. They're renting the idea of your car to 10 different drivers at the exact same time.
Wow.
Yeah, they're relying on the statistical probability that you won't all ask for the keys back at once.
That sounds like a house of cards.
It is. Sack points out that the bank needs your cash to sit still so they can leverage it. He says, literally, the stillness is the product.
The stillness is the product.
Yeah. But the terrifying reality of this fractional reserve system is its extreme fragility. If everyone in your town woke up today and asked to withdraw their money in physical cash, the system would instantly collapse.
Because the money simply isn't in the vault.
Not even close.
So if the bank is essentially a tent pretending to be a marble fortress, how on earth does it survive?
Fear. It survives purely on the psychology of fear.
Okay, unpack that.
The gatekeepers of this system have conditioned the public for generations to believe that holding and managing your own value is inherently dangerous and reckless.
Like you can't be trusted with your own money.
Right. They mask the reality that the banks are the ones aggressively leveraging your money to the brink of collapse. They plant a deep fear in you that your money is only safe inside their walls.
So the doors of the cage are wide open, but our own fear does the locking for them.
Exactly. Beautifully said.
Wow. So they actively use our money against us. Their stability is essentially a mathematical illusion,
Right.
and they need us to stay perfectly still.
Yep.
How do they trick us into willingly walking into this dynamic with a smile on our faces?
Well, according to Sack, they do it through the ultimate psychological hook, the credit score.
Oh, the credit score. The evolution of the credit score is perhaps the most insidious part of this entire financial structure.
It really is. If you look back, credit score started as a simple, cold risk assessment tool for lenders, just pure math.
Right.
But somewhere along the line, it morphed. It became a measure of personal identity. It became a metric of moral worth and, like, civic pride.
Yeah, today, people subconsciously equate having good credit with being a good person.
Oh, totally. People brag about a 780 credit score like they just made the honor roll.
It's so true. But Sack argues that a high score doesn't measure your financial freedom at all.
Not one bit.
It measures how profitable and reliable you are to be squeezed for interest.
Exactly. The reward for having a pristine credit score is just a bigger rope to hang yourself with.
Like pre-approved limits, massive auto loans, more sophisticated debt.
Yeah, you are effectively proving to a corporate algorithm that you are a highly compliant investment.
Wow.
And yet, this system that we wrap our self-esteem in is deeply structurally flawed. I mean, it is notoriously riddled with reporting errors.
Oh, we've all seen that.
It is prone to massive data breaches where your identity gets stolen, and it's controlled by credit bureaus that you never explicitly chose to do business with.
You cannot opt out of their surveillance.
You really can't.
And here's where the mechanics get really interesting and a little maddening, frankly.
Yeah.
The concept of hard inquiries.
Right, the hard inquiries.
According to the rules of this game, if you want to be responsible and shop around to compare mortgage rates or auto loans, the bureaus actually penalize you.
Yeah, you lose points simply for having your credit looked at multiple times.
Wait, so a system that supposedly grades my financial responsibility actually docks points if I responsibly shop around for the best interest rate?
It's backwards.
That's like a doctor lowering your overall health score just because you decided to get a second opinion. It makes zero sense.
Well, to understand the mechanism, you have to look at it from the algorithm's perspective.
Okay, play devil's advocate for the algorithm.
Well, to be fair to the banks, their models view a sudden flurry of loan applications as a potential panic move. They assume you are desperately searching for liquidity and might be about to default.
But Sachs' entire point is that the algorithm doesn't care about context.
Exactly. So it actively punishes responsible comparison shopping. The system quietly discourages you from looking for a better deal.
It just introduces friction.
Right? Friction. So you just take the first offer, sign the paper, and get back on the treadmill.
We tolerate a system where the act of inspection damages the thing being inspected.
And on a deeper psychological level, we allow this because we have been completely conditioned to self-police.
We eagerly polish the bars of our own cage.
Yeah. We wrap our self-worth in a profitability rating invented by the exact same institutions that are extracting wealth from us.
They didn't just put us in the cage. They convinced us that the cage is a measure of our character.
That's the real trick.
And this illusion of identity brings us to the ultimate symbol of the American dream, which, according to Sack, is the deepest delusion of all: ownership.
Oh, yes, ownership.
I want you, the listener, to think about your biggest asset right now, the thing you are proudest of owning. Do you actually own it, or are you just renting it from the bank or the county?
That is the uncomfortable reality Sack forces his readers to confront. Let's look at a vehicle, for example. If you finance a truck you can't truly afford, you aren't acquiring an asset. You're acquiring a master with wheels.
A master with wheels. Wow.
You become a servant to the vehicle. You are now forced to keep a job you might absolutely hate just to make the monthly payments. Debt-financed assets completely own you.
But what about the house? I mean, that is the holy grail of financial advice. You pay off a 30-year mortgage. You have a mortgage-burning party in your backyard with your friends. You own the dirt free and clear.
Right. Well, not according to the mechanics of property law.
Really?
Yeah, Sack points out that even after the mortgage is burned, the rent never truly stops.
Because of property taxes.
Exactly. Try stopping your property tax payments. If you don't pay the county, the government will put a lien on the house. Eventually, men with guns will come evict you and sell your own property on the courthouse steps.
So you never reach a magical day where the financial obligation permanently stops.
Never. You merely change landlords from the private bank to the local county.
You are a tenant on your own land for life. You just buy the feeling of ownership.
And Sack says people don't just buy houses, they buy a prepackaged identity of success.
Oh, for sure. The square footage, the neighborhood, the manicured lawn.
And it's a costume of having made it, designed to keep them running as fast as they can on the hamster wheel just to maintain the facade.
And they aggressively gatekeep anyone who questions that setup, because the costume has become the person.
Exactly. When the wheel is the only thing you've ever known, someone standing still next to it doesn't look free. They look like a failure.
That makes a lot of sense. But Sack doesn't just diagnose the doom and gloom here, does he?
No. He offers a very specific philosophy for getting out.
Build what you own. Which, it sounds like a great bumper sticker, but how do you actually execute that?
Well, Sack isn't telling people to light a match, cause a bank run, and go live in the woods.
Right, no pitchforks.
Right. He's advocating for a philosophy of radical self-reliance. Practically speaking, building what you own means actively decoupling your identity from consumer debt.
So, stopping the lifestyle creep.
Exactly. It means refusing to finance a lifestyle upgrade just because a credit score algorithm says you're approved for it. Erasing your debt isn't just about saving interest. It's about buying back your time.
So it's about acquiring unrepossessable assets.
Precisely the point. A bank can repossess a financed car. The county can seize a house. But no institution on earth can repossess your specialized skills.
That's a powerful thought.
Right. They can't foreclose on a deep network of professional relationships. They can't put a lien on your intellectual property or your ability to solve complex problems.
So Sack argues that true wealth is stepping partially out of their flow of dependency.
Yes. You keep your overhead incredibly low, you build skills that generate value independently of a corporate structure, and you realize that the monopoly money is just a tool, not a master.
And when you do that, you become much, much harder to own.
That is the ultimate goal.
Man, Let's bring this all together because we've gone on quite a journey today.
We really have.
We started by looking closely at the dollar bill and realizing the money itself is designed to shrink.
Yep.
We unpacked how the national debt and everyday banking fees like transaction reordering and overdrafts are part of this highly engineered treadmill to extract wealth.
The soft case.
The soft cage, right.
Yeah.
We explored how the credit score tricks us into guarding our own cages by tying our moral identity to a corporate profitability metric.
Which is just wild to think about.
And we confronted the reality that even the ultimate dream of homeownership is often just a change of landlords.
The architecture of the entire system, from top to bottom, is designed to keep you in motion.
It needs you to keep owing.
To keep owing, to keep fearing, and to keep believing that the system is an untouchable law of nature. But the moment you recognize that it's all built on a foundation of your own borrowed trust, you fundamentally regain your agency.
It completely changes how you look at the world around you. And honestly, it leaves me with a really profound, lingering question.
Oh, yeah.
Yeah. Joseph Sack tells us the only way out is to build skills and ground that no bank or county can ever repossess. But we're living in a world right now where artificial intelligence is rapidly learning to mimic human skills, write code, and basically automate our knowledge.
That is the big elephant in the room.
It is. So what exactly does unrepossessable ground look like tomorrow? What is the one thing you own, truly own, that the machine can never skim?
Wow. That is the frontier we all have to figure out next.
I really want you to think about that later today. And the next time you pull a dollar bill out of your pocket, look past the green ink, the official seals, and the numbers.
Look at the faith holding it together.
Exactly.
Yeah.
Look at the faith holding it together and ask yourself what you're really building with it. Thank you so much for joining us on this deep dive. We'll catch you on the next one.